Tigadan 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 pam pam tigadan 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 pam pam tigadan 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 pam pam tigadan.
Moving to our industry perspective, Addison Snell, CEO of Intersect360, is going to give a talk about the new HPC. Addison, how are you today?
Hey, Brian, thanks very much for having me. I appreciate being here as always, although it'd be fun when we get back to Lugano, I'll say that.
100%.
All right. Well, thank you very much for the time slot, everybody. I love presenting at these HPC AI advisory councils to give an HPC AI market update. These get fueled by ongoing research that comes in through us. So we try to keep it fresh with our most recent research. My agenda for today will be to give an update revising our 2021 market outlook. We have not, trying to just clear a dialog box there. We have not given a revised forecast yet, or revised market numbers yet for 2021 in terms of final numbers, but that'll be out very soon. We can start narrowing it down now, and I'll talk through that. And highlights from new studies, mostly on HPC software environments. I can give an overview of that. And then the most recent completed study is on HPC and AI technology adoption. I've got the tables up on that. We have not finalized all of the tables and sent those to clients yet, but I've got some headlines that I can go over that are clear from a first pass through the data. Our newest budget survey, budget trend survey, is in the field right now, and that will be the final piece of completing our newest HPC forecast, for which we're going to have an expanded view this year, looking at a more inclusive look that also brings in hyperscale and dedicated AI spending that hasn't been attached to HPC budgets. So we're capturing all of that, and we'll get a look at our ongoing Winter Classic Invitational Student Cluster competition with a shout out to Dan Olds, our Chief Research Officer, who's also here on the call. So this is looking back at our previous 2020 market update and out to forecast 2021 to 2025. This is the slide as we showed it, with emphasis added, from June of last year. We typically get our forecasts out to our clients in April, and we'll start publicizing them in May. So March is kind of an awkward time to do this, although we're starting to have a pretty good idea of how 2021 turned out. The biggest thing is that here we were in the pandemic, and we were forecasting a big rebound year in 2021. As we get the COVID-19 echo effect, sales cycles come back in, we get through the pandemic, the sales cycles speed back up again, and we start to capture a lot of the delayed spending from 2020. And also, we were aware then of microprocessor shortages starting to hit supply side, but as of June last year, we were saying we didn't anticipate it would have a noticeable effect on the full year for HPC. So those bullets were both on there, and now it's starting to look a little bit different. So this is the forecast as we showed it in June, where you see that big bump year from 2020 to 2021. It's not real, that's kind of artificial growth. If you smooth it out from 2019 to 2022, that should be the effect of sales getting delayed from 2020 into 2021. As we get through the pandemic, then you pick up a big bump, and you eventually smooth out toward the long-term 7.5% compound annual growth rate. What happens is, if you get a really delayed recessionary effect like you could have in the pandemic, then you start trending more away from sales that are delayed to sales that are lost. And I'm afraid that that's really what we're starting to get into with 2021. This is a line from Chris Willard, my co-founder at Intersect360 and our original chief research officer who preceded Dan, when you make a forecast, it has to be bound by what's realistic. Reality has no such restriction. And that's the evils of forecasting. It's hard to forecast things like pandemics and wars and droughts and plagues. These are real life situations that tend not to form the basis of a forecast, and then reality goes and does something weird, and that's what throws you off of things that are otherwise smooth curves. So just looking at these assumptions, when we made the forecast almost a year ago, Chris and Dan and I were all, in some sense, optimistic. Vaccinations were underway. We're heading back to so-called normal economic activity. But by late 2021, vaccination status was uneven. There were, Omicron was starting to come out, and it was obvious that some industries, such as the airline industry, automotive, entertainment, there were some industries that hadn't fully gotten a big rebound effect by the end of 2021. In June, we were aware of potential supply chain issues, but again, optimistic that they wouldn't have an effect on HPC. By the end of 2021, it was clear that supply chain issues had been delaying some HPC deliveries, particularly in the entry level and mid-range, although also I think they affected at the very high end related to the final bullet point. We were anticipating that Frontier would revenue in 2021, and by the end of the year, it wasn't complete. I think supply chain issues were one factor that went into that, but the fact of the matter is we didn't get the Frontier system into 2021. Now, China did have Exascale Systems, 2 of them, in fact, and those are widely reported on at SC21. But there's a question about what revenue really goes with that, because those are systems that were built, not bought. And I'll expand on that in just a few moments. Expanding first on the lingering COVID-19 effects, there were just some industries, particularly automotive, aerospace, manufacturing, oil and gas, electronics, and academia, all were feeling short of the full projected rebound that we were going to have in 2021. Although conversely, pharmaceutical spending was continuing strong. That's sort of an extended pandemic economic effect. That is preliminary. We are surveying this right now, as I said, in our annual budget survey. We do those early in the calendar year so that we can look back on a complete year and ask people what happened to their spending for HPC. We think there is continued variation by geographic region, and that entry level and mid-range have been more affected by this than high-end and supercomputing. That would be a continuation of the pandemic economy effects that we saw previously in 2020. Now, cloud still helps. If I get my on-prem planned acquisitions delayed or canceled, well, cloud can help pick up the slack. And similarly, if I have a sudden increase in demands, like, for example, in pharma, and there's a spike above what I can get on-prem, well, cloud again helps on the other end. Cloud does really well with uncertainty. If you don't know what your planned spending is going to be, or it changes very quickly, that's exactly the sort of area where cloud does well. And we're saying now that cloud is poised to continue its very high growth. As of our newest technology survey that's come in, where we touch cloud in just about every survey we do, no matter what the topic is. And I would say that's clearly true. Cloud had another very high growth year in 2021, buoyed in part by pandemic effects. That's only one of the effects. Obviously, AI is another, and just the underlying growth rate of cloud is a third. So there's a lot going on with cloud, but clearly we still had a lingering pandemic economic effects in HPC through 2021. Supply chain disruptions. We have had direct reports, including we brought this up in the last HPC AI Advisory Council meeting. I think Australia was the last one we presented at late in the year. People were telling us directly then that people were seeing longer lead times in ordering and delivery for HPC systems and components. We have built these questions into our budget survey, including asking specifically about whether there were systems or spending that got delayed out of 2021 into 2022 and what the budgetary effects of that have been. So we'll be able to measure that. It's not going to be huge because it's going to be a portion of one quarter essentially that gets delayed out of 2021 into 2022, but not huge. It's also not nothing. That's a measurable effect that we can look at in the market, and there is going to be delayed revenue. We have seen this on the supply side as well. There are comments in vendors' quarterly and annual reports about supply chain disruptions in enterprise computing. Cloud, again, helps pick up the slack here. If there's a delay in on-prem, a lot of this can go to cloud. And I think cloud also, in some sense, exacerbates the problem, because if there's a shortage and the major cloud service providers or hyperscale companies are getting priority on deliveries, then that exacerbates the effect to end users. Exascale Systems, our forecast model originally was assuming Frontier was going to be in there and recognized by year end. This did not happen. HPE still at this point has not recognized revenue from the Frontier system. China, 2 Exascale Systems. I was actually impressed how much we did learn about these systems at supercomputing, mostly through the Gordon Bell papers. Tiffany Trader and HPC Wire team have also done a good job describing what we learned about these systems, and that'd be another great topic to explore in these conferences. And I'm not going to get into them here other than to say that from an analyst perspective, it gives us a bit of a toothache because these systems are built, not bought. When we measure a market, generally the metric that people are looking to us for is system revenue. When we do, for example, market shares or market size, we pick a revenue unit like dollars and we say, here's the market size. And what we mean by that is, here's how much people paid for these things within a given time period, within a calendar year. Well, with these Chinese exascale systems, yeah, there are R&D dollars, but there's no vendor, there's no transaction where the Chinese government bought something from a company like we see with HPE, for example, and the exascale systems going in the United States, or previously IBM with Summit and Sierra, or whoever you like, right? That there's some transaction that you can measure in revenue. And if you take all of the R&D dollars, well, that's not right either. There's a lot of R&D spending that goes to people and operations that aren't really revenue. So right now we have not found system revenue to track with this, although we are going to research it forward. There may be some component sales that we should track in individual categories, but at this point, I would say you should not expect a big bump to our system revenue view of the market due to the Chinese exascale systems, because there wasn't any, right? Now we can do something artificial and say these Chinese systems are essentially worth this much. So if you think of them in terms of, I don't know, a total available market, it's not really an available market, but there are these phantom systems that are homegrown, then I guess sure, but there's not traditional system revenue that we've identified at this point. So all of that goes into what we released as revised 2021 forecast guidance. We had been on that 16.4% rebound year over year. We gave revised guidance of +6 to +12 with no change to the 5-year outlook at this time. And I'm going to go into this a little further because we've gotten more information just in the last couple of months since we released this forecast guidance. Now, even at +12, that would essentially be a bad news kind of market year because you're losing a lot of the rebound that you should could have had. And +6 would be a very bad news, because what it means that all the growth that we lost 2019 into 2020 stays lost, that there is no rebound effect at all at +6. Where we are then, the low part of the range for +6 is essentially saying no COVID-19 rebound, previously delayed sales become lost sales. At the high end of the range, we'd be seeing a limited COVID-19 rebound in some industries. This one is really pending budget analysis from the survey, but I think for that first bullet point, left versus right, we're kind of in the middle on that one. Maybe a little toward the low end, maybe more toward the just left of center, but we'll see. I don't want to say too much till we get to really do the budget analysis in the newest survey. Okay, then the next bullet point, significant supply chain disruptions to systems in Q4 versus little to no effect of supply chain disruption in Q4. I think, again, we're kind of in the middle. We want to see where we are with the budget survey. From the supply side, we have not seen major effects from vendors saying, yeah, this really affected our numbers in a big way. We're seeing some minor comments, but we're hearing it more on the end user side. And I think it's going to be, again, to the entry level and mid-range a little more through the resellers and smaller vendors of systems. So again, I think we're going to be kind of in the middle. We'll probably see a couple of points worth of disruption, but let us get the budget information in before we make a real call on that. And then finally, at the low end, we would see no exascale revenue from Frontier and no identifiable revenue from the Chinese systems versus recognized revenue from Frontier or identifiable system or component revenue for Chinese exascale systems. This one, I think, we're all the way into the low column. Pending, we can find some component revenue for the Chinese exascale systems, but I don't think so. I think from an exascale standpoint, we're really hitting the no growth area. So overall, we should be shaded toward the bottom half of this range of 6 to 12. And we're now saying it's really more like the 6 to 9% range. I don't think we're going to hit 10% growth. We're kind of taking out the top half of that range, but that's still pending the budget analysis. So given our observations for the past 3 months, tending toward the lower half of the forecast range, +6 to +9, that's total market, not server component. And despite the fact that that looks like normal growth, this is essentially disappointing because it's wiping out the rebound. If a normal year is 7% growth, and that's what we're hitting after it was flat last year, that means that we really did lose all of the growth out of the pandemic. Server revenue is only one component, and that's the part that tends to be depressed the most. Servers should be underperforming the total market, where we should see a higher growth from, say, storage or certainly cloud, and that we did see in 2020. I think that'll be repeated with a continuation of these pandemic effects into 2021. We have done preliminary analysis of the major system vendors and their quarterly reports: HPE, Dell, Lenovo, Atos, Fujitsu. HPE and Dell are the two largest ones. HPE, the largest major system vendor, is really in very low single-digit growth for servers. They do call out HPC and AI computing as a separate business unit. And that growth in constant currency is in the range of about 2 to 3% right now. But then they also get substantial contribution from the HPE compute division outside of what they identify as HPC and AI, and that is flat. So that's 2-3% is kind of the high end of the range of what we would see from HPE and servers. Dell has done a little better. They're looking more like 6%, 7%. All this is preliminary. We've got to do this, grid this out. Lenovo had a very good year. Atos had a very good year, but Fujitsu is going to have a really down year. on a percent basis because they're coming off of, in 2020 they had the Fugaku supercomputer, so now they've lose that going forward. And then you get into smaller vendors beyond that. IBM, noticeably absent from this list, has essentially been exiting the HPC industry, so we're seeing a big decline in year over year from IBM. Then there's a big other category even beyond the other named vendors that aren't on here, and those I think are going to be down also, as I kind of mentioned, year over year. A lot of the resellers that service the entry level and mid range that we think is disproportionately affected in multiple ways. So before looking at the demand side data, our preliminary target for HPC servers, just the server portion of the market, year over year growth, is going to be, maybe about flat to slight growth overall. Don't hold us to this yet because the budget survey is such an important part of the guidance here. But this is what we're telling clients right now, is that servers could even be flat to slightly down in a worst case scenario, but probably you're looking at very low single digit growth from HPC servers. This is where I will stop to say something that's not on the slides here, but I recognize that this is very different than what our friends at Hyperion Research are saying, where they have publicly said already by the end of Q4 that we are trending to a very high rebound growth year in HPC servers. I forget the exact percent they put on it. It was something like 15%. Go look up what they said. I thought it was preliminary for them to be putting an exact growth on the year before the year was complete. But beyond that, I will say we just don't see it. We haven't found a single vendor that's trending that high. We don't think budgets are trending up like that. That has no supply chain effect. That has, there's no revenue from Frontier. And they, just looking at HPC servers, they should be down because they had an extra $1 billion for Fujitsu that wasn't real in 2020. They gave Fujitsu $1.5 billion for the Fugaku supercomputer in 2020, which it wasn't. That was the total project cost. But the supercomputer itself from Fujitsu was between $400 million and $500 million, not $1.5 billion. So the Hyperion number for 2020 for servers was already too high by $1 billion. And then that goes away. And they're talking about 15% growth on top of that. It's all I can say is, I don't know their methodology, but we disagree. That's going to be a popular number. People always like buying the high growth number. But if you care about accuracy, that does not conform to any of the research that we have. So that's where we are with that. Okay, additional research, end user studies. I'm going to talk mostly about our software environment study, which we have begun sending written reports to clients on and have really complete. The newest one that's complete is our annual technology adoption survey, where we look at a lot of trends. There we'll be able to just give headlines of quick look through, some of the top hit learning points from all the tables. I mentioned now that the budget trend survey is in the field right now, looking at not only growth trends, which is important to do annually, and what gets spent where as a budget map, also supply chain, and we're looking at a lot of different CapEx versus OpEx, on-prem, off-prem, utility versus bespoke. All of those things are in the budget trend survey. Later this year, we're going to be doing deep dive surveys on AI. That'll probably be up next, and how it overlaps with HPC, where it's an independent market, what are the AI technologies, frameworks, et cetera. And then storage and data management is really due for a deep dive study from us, looking at the latest trends there. Obviously, we touch all of these things in our other surveys, but to really do a dedicated survey on AI and a dedicated survey on storage and data management, let's just go into a lot more detail. Okay, so HPC Software. This was a comprehensive study of operating systems, middleware, developer tools, primary applications across 11 different HPC application domains. We looked at what the source of the software was. You see all the different domains. listed there. We looked at job scalability, cloud affinity, how well applications scale and perform on different processing architectures by domain, and also, of course, the incorporation of machine learning. And I'll touch on all of these things here. Operating systems, CentOS is still the #1 operating system across HPC, followed by Red Hat. This will be very interesting to watch as we see the transition from CentOS to Rocky and what's supported and what's not supported. And I was impressed actually with how much Rocky showed up in this survey already, and that bodes well to them capturing some of the share. I was delighted to hear it as part of the conversation just previously about where it's going to show up in HPC, but really we should see a bump of other areas as well, such as Ubuntu and Red Hat, as people look at the transition from CentOS. The other thing to point out here is that this chart is entirely Linux. There are a few instances of non-Linux that's out there. They showed up in other, Windows can still show up. There are some old Unixes that can still show up. And, don't scoff. There's entry-level and mid-range HPC that's done on moderate-sized clusters that can use really anything. But HPC is dominated by Linux, and that should continue for the next several years. ISV versus open source versus in-house. This is not a chart we've shown before. The proportion of in-house has really been growing, and I'll go into that in just a moment, but you can see the very different proportions of particularly commercial licensed applications. That's the ISV chunk, is much higher in commercial markets than it is in public sector markets, whereas open source is higher in the public sector. But the big thing is in-house development has really been on the rise over the last several years, and Python has become a major language for HPC and AI development. Fortran is starting to slide more into maintenance mode now, and we're seeing less new development on Fortran. It's still out there. It's still important to HPC, but I have to retire now my thing I've been saying about HPC languages for a long time, about it being 25% C, 25% C++, 25% Fortran, and 25% everything else. And the only thing that changes is what's in the everything else. Python is now broken out of the everything else and become a dominant HPC language. And that old standby of mine really needs to be retired now. This is new. I think it's been fueled a lot by AI and popularity of tools like PyTorch. But beyond that, I think it's just a common language that people learn, and it is theoretically not as scalable as some of these other languages. We're also seeing growth in some of the hyperscale languages, particularly Julia, but also Go. These languages are out there, and I think can also have an effect on the HPC landscape. Now, this next chart is my favorite one here. I've been presenting for years about the reduction in ISV, or a trend away from it. We were looking at things like the growth of OpenFOAM in CFD. But as of this newest software survey, we also dug out, more than 10 years ago, we had data from our previous site census surveys and what people were running, and the balance of in-house, open source, and ISV. The top bar there is commercial ISV codes, which went from being about 35% of all applications being run in 2010 to being barely 20% in our most recent survey today. Open source has grown a little bit. It stayed mostly steady, but has grown. The biggest growth, especially as a proportion basis, has come from the in-house contributions. That's been fueled in large part by successive trends in big data and analytics, followed by machine learning, really driving a lot of in-house development over the past several years. And it's evident when you look at a long-term trend like this this over an 11, 12-year period, and what that means to the change in industry, in how people are managing software. This is a noticeable difference in the scope of our research. Typical and maximum job scalability. The big news here is that, your typical job and even your maximum job is often a lot smaller than you think it is. We love talking about petascale and exascale and these large systems, but HPC systems are full of a lot of small jobs, and half of the time a typical job is 4 nodes or fewer, and more than half the time the maximum job is 16 nodes or fewer. This is across the industry. So this just underlines the importance of job management, system management, schedulers, all of that boring middleware stuff that people don't like to look at presentations on, that we were also measuring in this study, become really important when you look at the characteristics of how jobs get run. These are the top biosciences applications. I'm not going to present this for all the different domains, although we have it. No surprise here that the different varieties of BLAST are at the top, but I like showing biosciences for this one just because it is such a diverse domain of a lot of different types of applications. And all right, BLAST is on top, but it's not like it's 80% BLAST and then nothing else. There's a very long tail of different types of applications in this vertical market. And then this even doesn't get into what proportion is in-house developed, which we already said was a big deal in a lot of different industries. So looking at this on a domain by domain basis is important for our clients. Cloud affinity is something that we measured for not only every domain, but every individual application. We asked people on a 7-point scale, is it all on-prem, or then midway it'd be about even, to the far end of the 7-point scale is it's 100% in the cloud. And where does that fit? This pie chart, as you see it here, is the aggregation of 7 shy of 2,000 individual application responses and where they fit on that spectrum from all on-prem to all cloud. This is consistent with our views of the market, is that most of these things are predominantly on-prem, and only 1% of the time did we find someone saying, well, yeah, these applications are 100% cloud. 7% of the time it's about even, but that 16% of the market is the hybrid cloud market. The top domain for cloud affinity was business analytics, maybe not surprising with the overlap to enterprise computing that we see there. Processor architectures, how well do your applications scale and perform on each of the following architectures? I've shown it for one domain here, which was scientific research. We can do this for any domain. Intel, NVIDIA tend to do pretty well on this, followed by AMD x86 CPUs, but they are very different in the different application domains. And a big thing to look at is the don't know column. What percent of time do people say, well, I don't know how well it scales? So if you get to something like ARM CPUs here, well, it doesn't look like they're doing too bad in the colored bar chart. 45% or whatever say, well, yeah, it scales pretty well, but that's 45% out of the 16% who had an opinion. 84% are saying, I don't know, and then they're not in that bar chart. Well, it just means that ARM isn't on their radar. So you have to scale your expectation there for what do people really think, that, that 46% of 16% have a positive impression right now. Whereas the proportion who don't know for Intel x86, this is going to be a lot lower. So looking at this by domain is interesting as well. I'm going to start wrapping up. I'm getting toward the end of my time, but I am going to get there. Current AI engagement. We're measuring in 3 different ways in this survey. Integration into HPC for steering or simulation optimization, that's kind of your AI augmented HPC, is showing up about 1/3 of the time. Using machine learning alongside HPC, not as AI augmented HPC, but more pre or post processing is a little more common. That's showing up about half the time. versus we're doing it, but it's entirely separate from HPC initiatives. That's also a little more than half. Most common machine learning frameworks, maybe not a surprise, TensorFlow, PyTorch are on top of that. We can look at that by domain as well. Headlines from the HPC AI Technology Survey, totally different survey, but I'll just run down some of these bullet points. This is in now, and you'll see more details from us. Probably when we get to Stanford, I'll be prepared with a few more tables on this. AMD CPUs are continuing to gain on Intel. Accelerator usage is continuing to climb, mostly with GPUs. And in fact, we're seeing a contraction of FPGAs in this version of the survey, and GPUs continue to do very well. NVIDIA keeps integrating more and more technologies, and we kind of we're testing. We've had a couple surveys where we test the idea of including NVIDIA as an option as a system vendor. And when we do that, users are identifying NVIDIA as their system vendor, as the second most common system vendor behind Dell. Now, this is a little bit problematic because NVIDIA says it's not a system vendor. It doesn't sell systems. It is a system manufacturer in some sense, but NVIDIA doesn't sell these systems directly. They go through partners, but that's not how users are thinking about it. People think of it as this is an NVIDIA system. This is also a problem potentially for some of NVIDIA's partners to the extent that people identify it as NVIDIA technology at the system level. 18% of users find moderate or major performance issues with their HPC systems. Average utilization, which we also get into in this survey, primary HPC system utilization is lower than I thought it would be at only 76%, and even lower for the second and third tier systems. When people have multiple systems at a site, those get down to below 60% utilization. We measured what I like to call satisfaction gaps, where we ask, all right, for this array of things, how important are they? And then separate list, how satisfied are you with available technologies? And then look at average scores and do some subtraction. So you look for where's the biggest gap between a satisfaction gap in terms of something that's high importance and relatively low satisfaction. That's where there's an opportunity, a satisfaction gap for a great market need for something different. Number one satisfaction gap by that metric has been this in the past and is still speed of storage, essentially looking at I/O. Number two, memory bandwidth. These are the biggest satisfaction gaps that people have. So again, you were looking for where's the gap between a high satisfaction or a high importance score and a lower satisfaction score. Lustre is starting to open a lead over GPFS as the most common parallel file system across all segments, commercial, government, academia. We're seeing now a gap with Lustre over Spectrum Scale. Other ones like BGFS, which people were talking about, we said don't get too excited. It could be, just sort of a flash in the pan. It's still out there, but it really is not taken off. It's Lustre and GPFS are still the two main ones. And cloud computing clearly has had another huge growth year in HPC and AI. Budget trends are currently surveying now. I mentioned we're looking at the CapEx, OpEx, committed versus utility, on-prem, off-prem. I want to see, we talked to Dan about this. We really want to see what's the effect of things like HPE GreenLake and Dell Apex and Atos HPC as a service, Lenovo TrueScale. There are a lot of these on-prem utility computing types of deployments, and I'm interested to see how people are responding to those. And of course, the effects of supply chain disruptions. We're going to look at not only a traditional view of the HPC market this year, like you're used to seeing it from us, but also to address some of these trends. We really have to start putting out an expanded view that incorporates the full scope of hyperscale and AI beyond the traditional HPC viewpoint. So you'll see that from us coming out this year as well. Final thing I want to say is excuse me, please tune in to the 2022 Intersect 360 Research Winter Classic Invitational Student Cluster Competition, including our studio update show. There's a lot of videos out there. You can find them on winterclassicinvitational.com, find them on our website, find them, the coverage on HPC Wire. Dan Old spearheaded this last year before he was part of our company. And now we're continuing it as Intersect 360 Research this year. This is a virtual student cluster competition that specifically does outreach to historically Black colleges and universities and Hispanic serving institutions across the U.S. who often can get underrepresented at the student cluster competitions on the major conference circuit. This is a chance for a lot of these schools to really get a bite of the apple and show what they can do, introduce HPC to a broader array of students, develop our industry, and increase diversity at the same time. This is something I've been talking about as a trend that was a need for 20 years, and Dan's actually out there doing it. We're thrilled to be continuing this. We recognize the sponsors, we recognize the mentors. As I said, it's a virtual competition, so it's going on across a couple of months, and mentors will host all of the teams on a given application on their site for a week. Then the students get a week off, then they'll do something else. They're now doing the NASPAR benchmarks at NASA Ames Research Labs is the current challenge, and we're grateful to all the sponsors and mentors out there. So do check this out. This is an important thing. And I love our ABC Sports like yellow blazers that we're doing the studio update show. And I give Dan all the credit for that. We're having a lot of fun with it. I'm pleased to be following Dan's lead on this. So big thanks to him. Okay, this is our traditional slide on how to work with us. You can tune into any of our podcasts. You can follow us in different ways. Sign up for our newsletter at intersect360.com. That's a great way to stay on touch with all the latest from us. And with that, I will wrap up and take any questions. Thank you very much for having me.
Thank you, Addison. I currently don't have any questions coming in. Hussein, do you have anything for Addison you want to chime in on?
Oh, hi, Addison. It's good to see you. So I have a question regarding the prediction, actually, of the impact of what's going on now these days in Ukraine and Russia, especially where we see this increase of price of energy and how much that would have an impact on the next, 6 months, maybe 1 year, I don't know.
Yeah. No, it's a good one. And it's something that we're going to have to think about in terms of our forecast with regard to energy in particular. In general, HPC spending has followed behind changes in the price of oil. So if the price of oil goes up, then after that, the HPC spending tends to follow along because the energy companies have more money to invest in things. And then it goes. So you'd like to think it's the other way. I do a lot of HPC and then I get the ROI out of that and I go find a lot of oil. And the fact is budgets are the other. Budgets follow what my revenue did last year, right? And that's what we tend to see with energy. As for larger geopolitical issues, there could be a change to defense spending in the United States as well as in other countries. There's going to be an effect, right? The largest and most populous country in Europe has invaded the second most populous country in Europe. There are going to be geopolitical effects and economic effects of that war. We're not war correspondents or that sort of analysts. It's our job to reinterpret that for HPC. I think a big thing it will do is amplify a trend that we've seen toward the importance of sovereignty. Go look at the big launch that Atos just did of the Bull Sequana XH3000 a couple of weeks ago in Paris. They were talking about the importance of European sovereignty and not needing to be reliant on American or Chinese technologies and what they can do independently. We're seeing Intel got mentioned in President Biden's State of the Union address directly for the sovereignty of having manufacturing in the United States. this notion of, and the Chinese exascale systems are entirely domestically built, right? So this notion of sovereignty becomes of increasing importance, particularly for supercomputing and artificial intelligence. And I think this will only exacerbate that.
Excellent.
And I think a follow-up to that is how will the CHIPS Act affect HPC?
Well, I mean, it goes toward the notion of sovereignty, right? I think the big question is, to what extent in the long term will we see any kind of deleterious effect of U.S. chip makers' ability to sell chips to other countries, right? It's one thing to say, well, I'm going to build up my ability to do all made in the USA, okay? But then if I suddenly can't sell those elsewhere, that could have a negative effect in the longer term on Intel, AMD, NVIDIA, if they have markets that get cut off to them. I think it's a little too soon to talk about that. We haven't seen, for example, ARM really take off in a big way yet in HPC. That would be the one that stands to benefit the most because it's got an open architecture that could be implemented in different ways in different countries. So that was a long way of saying we'll see.
Okay. Thank you, Addison. Appreciate the presentation and time.
Thanks, everybody.
Tiga-dum, tiga-dum, pam, pam, tiga-dum, 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 pam, pam, tiga-dum, 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 pam, pam, tiga-dum.